Hi, welcome to this video today, which is on the subject of Forex chart patterns, which work the best and have the highest probability of success. Now, most beginners coming in the markets want to find chart patterns and trade them longer term for profit. Now, in terms of chart patterns, what I would say is statistical evidence shows any chart pattern, doesn't matter which you pick, it could be head and shoulders, top, bottom, Gartley pattern, whatever. Statistically, the chances of making money with that pattern are no better than random. And I'll go through the evidence a little bit later on. Now, in terms of this video, I just want to warn people against using chart patterns and go through how to use technical analysis in the right way to make money. Now, in terms of chart patterns, you've got a lot of educators demonstrating them online. No evidence, though, that they've actually made money with the pattern, and normally they're doing it backwards. It looks very compelling to anyone unfamiliar with Forex trading that chart patterns actually do work. They don't. What is happening is we fall for cognitive biases when looking at charts. Now, the two cognitive biases I want to focus on are the clustering illusion and the Texas sharpshooter fallacy. They come into play in normal life, but really come into play in the Forex markets. You see order when it isn't there. What you've got to keep in mind in Forex markets is cause and effect. Okay. Now, in light of this, what I just want to do is show you a quick clip. It just demonstrates the clustering illusion and sharpshooter fallacy in general terms. Only about a minute 30 long. Okay. Take a look at it, and if you don't understand why it's relevant to Forex trading, I'll explain when we come back. Obviously, we'll be looking at how to make money with technical analysis as well. Right, here's the clip, only about a minute 30, then we'll be back to discuss.
Abraham Lincoln and John F. Kennedy were both assassinated by a man with 3 names, 15 letters long. John Wilkes Booth and Lee Harvey Oswald. Neither killer would make it to the trial. Both men were shot on a Friday, sitting next to their wives. Lincoln in a Ford theater, Kennedy in a Lincoln made by Ford. What are the odds? Why do deaths always seem to come in threes? How did the basketball make it in there from all the way across the court? Why did the tornado spare the church? Some things in life seem too amazing to be coincidence, too odd to be random, too similar to be chance. When you desire meaning, when you want things to line up, you see patterns everywhere. Order makes it easier to be a person, to navigate this sloppy world. You're born looking for clusters where chance events have built up like sand into dunes. Picking out clusters of coincidence is a predictable malfunction of a normal human mind.
Hi, welcome back after that short video clip there. Now, that illustrates the clustering illusion and the sharpshooter fallacy in general terms. Hopefully you understood what they are from that clip. If you don't worry, I'm just going to explain it in more detail and also how it relates to chart patterns, the evidence they don't work, and how to use technical analysis in the right way. Right, let's go over to a storyboard where I've written up the points and discuss them in more detail. Right, just written up some points here which we're going to go through, but first of all, go back to that video clip that illustrated the sharpshooter fallacy, the clustering illusion and hindsight bias. What did we have? We had a guy shooting at a wall. He's not a sharpshooter, he's just doing numerous shots at a wall. Some will just cluster together. He hasn't meant to do that, okay? Only after the event can he prove he's a sharpshooter, by going over and drawing the target so the bullseye is over the cluster, okay? So basically not a sharpshooter, but if you looked at that target after the event, you'd think a sharpshooter had been practicing. Does this happen in the Forex markets? Yes. Let's think of chart formations and patterns you see on a price chart, they are not caused by past price action. A lot of traders think they are. The chart works in isolation, and there's some sort of formula or scientific equation to the markets. It's not true, is it? What you have on a price chart is the technicals. That is the effect. Okay, sentiment to the fundamentals are the cause. Okay, the pattern is random. You can look for any pattern you want on enough charts, okay, and you will find it. It's a clustering illusion in hindsight. Traders look for the patterns that did work, but they don't see the ones that didn't. Okay, this is why educators are so compelling in terms of the message they give in terms of using chart patterns, and why so many traders do. And these traders don't do their homework. If they did, they would understand it's just a clustering illusion. Okay. Now, interestingly, I thought this was quite amusing. A lady, I think she was at the Economist magazine, came up with a chart formation called the vomiting camel. Okay, she did it as a joke. The chart pattern was taken seriously by many people who went back on numerous charts and found it. You'll find any chart formation on any chart, but you've got to know the cause of the formation to make it valid. You can't, can you? Just look at price action. All you're seeing is the effect. Now, in terms of people generally, traders especially, we're just always looking for order and meaning. Okay, it's a bit like in that video clip. Those similarities between JFK and Lee Harvey Oswald, amazing, weren't they? Those coincidences, not really. Think of the differences. There's thousands. Okay, yeah, you just think of a few yourself. Different dates of birth, different heights, different weights. They live in different states. They're born in different years. You go on and on and on. But we look for similarities rather than differences. So it's like on a price chart. See the pattern when it works, not when it doesn't. I think a good reason not to use chart patterns is none of the world's top traders do. You just go and look that up. Okay, statistical testing has proved the randomness of any chart pattern on numerous occasions. Now, in terms of patterns, I just picked three that are very popular. See Fibonacci, Elliott wave, and Gartley patterns. Now, a fact about all three creators. Okay, Fibonacci was the creator of a equation for exponential growth. He didn't trade the markets at all. He was in 16th century Italy. He was a brilliant mathematician. In terms of his number sequence, people long after the event, or when he devised his number sequence, suddenly looked at it, saw different ratios between numbers in the sequence, and then made them relevant in trading. Okay, so you often see people say about 50% retracements or 38% retracements, the areas to buy or sell at or whatever. Sometimes they might work, other times they don't. I think Fibonacci would be as bemused as me as how, in terms of how his equational and exponential growth got hijacked by the investment community. Elliott wave, Elliott, who devised wave theory, he actually said that he could predict anything in the future, not just financial markets. Now, you'd think that he would have died a very, very rich man. He didn't. He died in absolute poverty. Okay, never made any money. Gartley, he never traded. He was an obscure 30s newsletter writer, and about 60 years after he passed away, someone actually bought Gartley patterns out as a fantastic way to trade the markets. There's a lot of people promoting Gartley now. He never made any money. If you look at that pattern, it's so complicated. It's obviously not going to work. Okay, so none of the world's top traders use patterns, and tests. You go do a test yourself if you want. They don't work. They do not give you an edge. How to use technical analysis like a pro trader? What you need to do is basically use very simple technical analysis, just big support and resistance levels. You don't want to be using predictive chart patterns. Then you want to know what's going on behind the price chart. So you look at the sentiment, the fundamentals behind the chart, work out where the big money is sitting. Use volatility with your technicals as well. Then your technical analysis can help you. You'll have a directional bias. The technicals will help you get into your trade and manage your trade when it's in the market as well. That's how top traders trade. Okay, they use technical analysis, they don't use patterns, and they all have an understanding of sentiment towards the fundamentals. Now, in terms of the video, I don't think there's anything else I can add, but you can, if you wish, join our mailing list on the link beneath this video. We'll send you a lot of information for free on technical analysis that does work, best trade setups, and other Forex education. But that's the video for today. Thanks for watching it. Take care. Have a good day.